Silver squeeze, and big evidence that we could be closer to a silver squeeze right now than any time in the last 4 or 5 years. We're going to dig in. Plus, there's big rumors going around in the silver world. We're going to dive into that. We're going to talk about the COMEX. Is the COMEX, as part of this potential squeeze, is the COMEX at risk of breaking? Yes, the paper exchange. I'm going to show you some crazy data coming out there, and more speculation based in what a lot of people think are facts about what's happening with the gold that the United States of America supposedly has in Fort Knox. I know one thing that's not supposedly true. That's that you've decided to join me down here in the basement. Thank you so much for coming down here. We appreciate you. We love to talk about gold and silver. We've got the 2026 subscription sale still going on. Yes, it's all completely free. Please hit the subscribe button. Give this video a thumbs up. Leave a comment in the comment section. Super chat, super thanks. Never expected. Always super appreciated. Where do we start? Silver squeeze. We don't talk about that much. We haven't talked about it much at all over the last year. We pointed out a fact, an important fact, that we had a silver squeeze, like a semi-squeeze over the last 6 to 9 months as the silver price went up and up. But now, are we at a point where we could actually have a silver squeeze? I forgot to talk about the big rumor. Let's talk about that. Then we're going to go into this evidence about the silver squeeze. But you guys are sending me all these emails. I'm getting all kinds of messages about this rumor, I'll say, or speculation that some of the big silver producers have decided not to sell their silver to the COMEX. I've not been able to corroborate that yet in any way, but it certainly is getting a lot of attention, I would say, within the silver community. And if it's true, it could be a very good thing for this continuation of the physical rally that we've seen in silver. And I need to make a big major announcement. This much I can tell you 100%, and that is that upstairs Susie, yes, my lovely wife and assistant, and I will officially announce that we will never sell any silver to the COMEX or to the LBMA for that matter. All right, let's talk about what happened yesterday when we had a silver collapse in the silver price. And let's dig in, because this feeds right into why we could be up for a big silver squeeze. Let's go out to the Silver Academy. And this is incredible data giving us the reasons why we had this horrific day yesterday in the silver market. Hold on one second here. Make sure we got you. Yep, you're up. All right, guys, here we go. Silver's day of reckoning. Shanghai just triggered the end of paper. Remember that. Shanghai silver meltdown exposed the biggest illusion in modern finance. Billions of phantom ounces dumped in hours. Paper markets imploding while physical silver vanished worldwide. Just Dario said this. This is incredible, guys. Breaking now. We have confirmation that they attacked and tried to break the silver market at the Shanghai Futures Exchange yesterday. Remember, that is the Chinese paper silver market. The Shanghai Futures Exchange now will restrict the relevant accounts. Translation from Chinese right here. Let's read what the Shanghai Futures Exchange says, which is on February 5th, 6 groups of accounts under actual control exceeded the daily trading volume limit for relevant contracts, reaching the exchange's processing standard. The aforementioned clients' trading activities violated Article 16 of the Shanghai Futures Exchange, abnormal trading behavior management measures, and the exchange decided to take regulatory measures to restrict the opening of positions by the relevant clients in the corresponding contract. So the Shanghai Futures Exchange is admitting that this happened. Now, it gets more interesting. That day will go down in precious metals histories as the day the paper facade, the paper tiger, cracked. What unfolded on the Shanghai Futures Exchange wasn't a market correction. It was an act of financial warfare. A 17% collapse in hours, an avalanche of synthetic silver traded into oblivion in the fingerprints of coordinated short selling plastered all over the tape. They call it volatility. Don't believe it. This was Shanghai paper hammer. All right. Two more pertinent points. And this, again, feeds into why there's major stress and we could have a short squeeze. COMEX, registered silver. Now we're talking about the COMEX, the futures market in the United States, has evaporated to roughly 104 million ounces. We're going to talk about why that is so important. Against an open interest big enough to theoretically own the entire world's mine supply several times over. Shanghai's inventories under 40 million ounces, yet somehow billions of virtual ounces were sold. Guys, we have a very interesting development in the world of paper silver right now. Okay, hold on here. Sorry. I thought you were looking at me. Now you're back. Hey, good to see you. Very interesting development in the world of paper silver. On top of this, we also know, footnote this, that the Chinese billionaire has opened a massive short position in silver. The same Chinese billionaire who made I think $3 billion going long on gold futures contracts now has sold almost 15 million troy ounces of silver short. Bookmark that as well. And on a side note, we talked about this yesterday, we are truly in a David versus Goliath moment because we have David Bateman, right, in the United States, the silver billionaire who also has somewhere around 15 million ounces. He has physical silver, continues to buy physical silver. So we have the real silver United States, David, the physical silver David versus the Chinese giant Goliath paper tiger. It's getting very interesting. And then we have the situation at both the Shanghai Futures Exchange. Hold on a second. I'm sorry, I forgot. The Shanghai Futures Exchange and the COMEX, where there's a big inventory problem. We're going to get into that right now. And I'm telling you, this could lead to a short squeeze in the silver price. But first, and this totally tells us why we're looking at it, we'll go here. Just Dario says, in case you aren't familiar with what happened to nickel, okay, the metal nickel in 2022, when a large commodity broker from China built a very large short position through JP Morgan and he didn't have enough nickel to deliver, here's the chart. FYI, guys, we're putting the pieces together. Yes, there was a massive short squeeze in nickel at that time. Now, here from Bloomberg points this out, okay? China trader who made $3 billion, so just to prove to you what we just talked about, on gold bets big against silver. Bateman, his name's Bateman. So it's the physical silver David in the United States, David Bateman, versus the paper tiger Bateman in China, has built the bourse's largest net short position. What's a bourse? Is that a market? I guess. Net short position in silver, with a bet on the metal's collapse now worth almost $300 million. Maybe upstairs Susie can Google bourse. I think it means market. Anyway, he holds a short position that stands at about 450 tons of silver, which I calculated to be about 15 million ounces or 30,000 contracts. And the metal's sharp drop has resulted in a paper tiger gain of about 2 billion yuan. Okay, now this is where it gets really, really interesting because now the guy Clive Thompson put out, he's a YouTuber, he's in London or he's in England, he's very smart, he understands these markets, put out a video that said, well, what I heard him say is that the COMEX is in big trouble. We could either, okay, I'm just giving you my speculation, have a short squeeze, or this could be real trouble for the COMEX because it's super interesting. Right now, right, there's 429 out. Oh, he's in Switzerland. Okay, sorry, Clive. Clive is in Switzerland. Right now, there's 429 million ounces outstanding on the March contract for silver on the COMEX, okay? There's only right now about 100 million ounces in the registered category. There's two types of silver that the COMEX holds in their vaults: registered and eligible. Eligible means nothing. It's claimed by other people, by ETFs, whatever. It's not available to settle contracts. The registered amount is the key amount. That's the amount of silver available to settle contracts when the futures contracts expire, which in this case, we're talking about the March contract. There's only 100 million ounces or 103, whatever, in the vaults right now. And there's 429 outstanding futures contracts, 429 million ounces. Guys, now all of those are not going to be settled for physical metal, are not going to want delivery. But two important things. What Clive points out, that under a very conservative delivery schedule, maybe 20, very conservative, best case scenario for the COMEX, maybe 25% of those contracts stand for delivery. That's about the entire amount that they have in their vaults. However, if things are stressed, right? Or if we have a crazy market, and wouldn't you say we got kind of a crazy market? We could have 50%, or I think he even said up to 70%. 70% would be 280 million ounces that people say, I want my silver. And the COMEX is sitting there right now with only 100 million ounces, 103 million. But wait, there's more, because the amount of silver in the registered vaults of the COMEX has been going down for like the last 3 months. I think it was like 167 million back in October, and it's been going down, down, down. If it continues to go down throughout the rest of February and into early March before that contract expires, there could be as little as 80 million ounces in the registered category. Again, if only half of those contracts stand for delivery, you're talking 200 million ounces, twice as much as they have in the vaults right now. I don't want to be the doom and gloom. It's speculation, but I think Clive knows way more about this than I do. I understand it, but these guys like Clive and these guys, they're usually in England. They understand way more about it makes sense, right? If half the people show up and want their silver, right, there's only half as much available as would need to be delivered on those contracts. I don't want to be like the sky is falling, but potentially, and we're hearing big people talk about this could spell big, big, big trouble for the paper markets. But wait, there's more, because think about what's happening in China and this guy Beyond with his massive short position, and the fact that the Shanghai Futures Exchange, according to the data we just saw, only has 40 million? Excuse me, ounces? Does it make sense now why I say, right, that we are probably closer now? And look, you guys have been with me for a while. I don't sit down here and say, we're going to have a silver squeeze. We're going to have a silver. But I think we are closer now to the potential for the market breaking potential or for a silver squeeze than any time in the last 5 years. All right, let's go look at the, oh man, it's crazy. Let's just go look at what the latest data is out of China right now. And we go to our friend, the Shanghai Ghost, right, who provides us this on a daily basis. And let's pull this up. For those of you who are new, this is the Shanghai Gold Exchange and the Shanghai Futures Exchange. The Shanghai Gold Exchange, the SGE, is the physical market. There's AG. AG is the periodic element table symbol for silver, okay? There's the Shanghai Gold Exchange. So silver on the Shanghai Gold Exchange is selling for $81. Let's go look where we are in the actually, this is London, England. This is the spot market. And on the spot market, we are in the West at $75.55. Back to this. Hold on one second. Here we go. So they still have about a $6, something what's happening. Have you noticed that spread between Shanghai and the West is narrowing? We've talked about this many times. That's not because the West is dragging the Chinese price down. That's because the Chinese price is dragging the Western price up. But there's something even more interesting to see what's happening, and that is here is the Shanghai Futures Exchange, silver. They call it silver there. They don't use the symbol on the Shanghai Futures Exchange. Their market is now in a healthy state of contango, which means that's the normal state that a market should be in. The futures price should be much higher than the spot price. Okay, and that again leads so that indicates to us that their market is in a much healthier state, and their market is setting the price of silver, because when we go out and look, as of a few minutes ago before I came on, again, spot price 76.32 in the West. What about the futures price? The future silver's price right here is 75.48. The futures price is lower in the West than the spot price. That, my friends, is what is called backwardation. That is an unhealthy market. All right. Most healthy commodity markets are going to be in a state of contango where the futures price is higher. Right now in the West, we are backwardated. We're doing the backwardation dance, which means people are willing to pay more to get their hands on physical silver now than they want to pay for it in the future. And some people speculate that the reason behind that may be that there's a rush for physical silver, and that possibly, just possibly, think about what we just talked about. There's some concern about the futures markets actually being able to deliver that silver. That's when you get into a state of backwardation. So remember, the Chinese market, healthy, right? Contango. The spread narrowing. The U.S. Western market, London and the United States, backwardated, a little screwed up, right? You know what's going on with the refiners and the marketer, all that. We won't even go down that path. I believe we are closer right now to a silver squeeze than any time in the last 5 years. Now, remember, okay, I'm the same guy who sat down here, right, and had an $85 silver bear that people said would never get unblindfolded. Oh, there he is, right there, old Smitty. His blindfold's off. He's not putting it back on. I also stated months and months ago when silver was in the mid 30s that I was wrong, and I apologize to you. I was wrong, okay? Because back last year, in September and October, I sat down here and predicted many times that the price of silver would be $65 or higher by April Fool's Day 2026. Okay, so just consider that. I'm not always right, okay? But sometimes I am, and maybe 58, 63%. I think we're closer. The big takeaway, when you look at what's going on in China, you look at what's going on in the West, you look at what's going on in the world, the fundamentals behind silver, that we are closer to a silver squeeze now than any time in the last 5, I'd say even 50 years at this point. And on that note, I do want to say thank you to, wrong hand, there it is, channel sponsor First Mint. If you want to get your hands on some silver that has never been touched by the COMEX or the LBMA or the Shanghai Futures Exchange or anybody, go check out First Mint. Okay, they mine the silver in Mexico. They're owned by First Majestic. That silver gets shipped to Las Vegas, Nevada, to First Mint, the silver specialist mint, where it's transformed into world-class silver bullion products that then get shipped directly to you, literally from the mine to the mint to you. The freshest silver in town and never touched by the COMEX or the LBMA. You can learn more about them here at firstmint.com. Let's pull that up. Here we go. And they do have a discount code that you can use as a member of Ron's Basement, VIPRB. VIP, Victor, Illinois, Paul, RB, Ron's Basement. All right, let's get back here. Woof. Have you ever experienced a time in your life like this with the precious metals? I haven't. I know a lot of you are kind of experiencing the same thing. The paper illusion is breaking. Let's go for the latest. It's almost becoming a daily feature for us down here in the basement from the silver billionaire. Mr. Bateman had this to say: the paper silver is becoming worthless. Remember what we just talked about with the COMEX and the Shanghai Futures Exchange. That's the Shanghai Futures Exchange is the paper market in China, the futures exchange. It's becoming worthless as physical silver is becoming priceless. The illusion equals physical is about to break. The rabbit will never go back in the hat. And we talk about this all the time. And now we got more to talk about the COMEX next. But guys, congratulations. We are truly in a new paradigm for the world of precious metals. I've got two super smart guys that both live in the Carolinas. One's a retired dentist, one's a retired architect. These guys are smart. They've been studying silver and gold for decades, okay? They both, coincidentally, and they don't even know each other, sent me messages last night and this morning essentially saying the same thing. Like, I'm not worried about anything with silver and gold. Like, we have crossed the Rubicon. We have experienced the watershed moment. We are in a new paradigm when it comes to these metals. Okay, it's been decades and decades, and I think it's just sinking in for a lot of us that have been here. But it is happening. It is happening right now. Now we got more interesting data out of the COMEX and about these circuit breakers. Right, we're going to learn about that as well. It's very, very interesting when silver drops. Right, when they shut the market off. Well, we're going to learn why and when that happens and some speculation in that regard as well. Before I do that, thank you to First Mining Gold for sponsoring Ron's Basement. They are a gold development stage company with 2 multi-million ounce projects in Canada. Each has millions of ounces of gold in the ground. Springpole in Ontario, Duparquet in Quebec. Okay, and they have other investments as well. But what's exciting is they're working these projects through the development stage, and big gold development stage projects in very strong jurisdictions are very difficult to find. You can learn more about First Mining Gold at firstmininggold.com. Did you hear the news yesterday? The COMEX, remember when this used to be a big deal? Those people at the COMEX, they raised margin requirements again. Remember that was their old trick for tamping down the silver and the gold price. They would raise margins, and it was a big smoke screen, but in the past, it was more effective. It's losing its potency at this point, and people are wondering, what's going to happen. It starts on Monday. I think it's turned into essentially a nothing burger, but we'll see how the market reacts on Monday. But what about the 10% of the circuit breakers on the COMEX? Man, there's so much. I'm sorry, I'm getting frazzled, guys. There's so much happening and so much to talk about. We are truly going through incredible times, but let's look at the circuit breakers. Rob Keentz, who's somebody who's well-respected and I think super highly of in the precious metal sectors, brought this up yesterday. Silver crashing to $50 support, right? Last night was crazy in silver. No data from the CME group on today's trading action. So, of course, we have no idea who's doing it, and no response from them or the CFTC, which is what the Commodities and Futures Trading Commission, on why the daily 10% circuit breakers are not working. So they have these like circuit breakers in place that are in a lot of the markets. The big markets have them, the S&P and all of them, that if the market drops a certain amount, we just turn the market off, right? But they're not doing that with silver. This is very interesting. I dug in and I want to share this with you, how these circuit breakers work. And it's a little, let's say I'm a bit, curious why they have it set up this way. I'll let you decide for yourself. It says, yes, this is from Google AI. The CME group uses dynamic circuit breakers, DCBs, for silver futures rather than fixed daily price limits. Okay, so they're dynamic, means they're moving. How they work: unlike stock markets that halt for the entire day after a specific drop, silver uses a rolling window to manage volatility. Oh, interesting. A rolling window. Trigger. Here you go, trigger. If the price moves plus or minus 10% within a rolling 60-minute window, that means it's always moving, okay, a circuit breaker is triggered. So it's not a daily thing. It's if it moves within 10% within a 60-minute window that's always rolling forward. That means like it's 10:50 a.m. Central Time right now, that if in the next hour the silver price, and I'm not wanting that to happen, were to drop by 10% within the next 60 minutes, they would shut off the silver markets. But listen to this, the halt. Trading is typically paused for all of 2 minutes to allow the market to reset, quote unquote. And for those manipulators from the big bullion banks to reset their positions, and for liquidity to return. The restart. After the 2-minute pause, the market enters a pre-open state where orders can be entered but not executed before resuming full trading with a new, wider price band, which of course benefits the big banks. Key distinctions: no hard daily limit. There's technically no maximum amount that silver can move in a day. Okay, so that's interesting. I think people were thinking, oh, silver can only go down 10% a day. No, because of this rolling window, there is no maximum amount that it can move up or down in a day, as long as it doesn't move 10% too quickly. Or if it restarts after each 2-minute halt, the price can continue to climb or fall. Then they touch on margin adjustments, which, again, we just had, that comes into effect, from my understanding, not until Monday morning or at the end of trading today. Margin adjustments, while not a halt, the CME frequently raises margin requirements during high volatility to discourage excessive speculation, which can indirectly slow down the price movement. So super interesting. These paper markets, regardless of whether they roll for 60 minutes or not, are in big trouble. Are you ready for a visual? Put your glasses on, because we're going to look at a visual that I believe was originally shared by Jesse Colombo from the Bubble report that shows, hold on here, something very interesting to us. Okay. Lucas shared this yesterday, but the charts from Jesse, it says, this is a good reminder of how small the physical silver market really is and how easy it is to manipulate it. Paper silver to physical ratio is about 408 to 1. We're going to go get an update on that because I think it's dropped a little bit, but this visual still absolutely pertains. If just 0.25%, that's 1 out of 400, of paper silver were settled into physical, it would wipe out 1 year of global silver production. But here's what we want to look at. And again, this came from Jesse Colombo back in 2024. It's the ratio of paper silver to physical silver when it was at 408 to 1. So again, here, guys, in case you can't see, I know a lot of you are getting older like me. That gray area right there, that little tiny slice that you're looking at, that's the physical silver, all right, 1 ounce compared to all this. Yes, it's true. All of this, which is the paper silver. Now, let's go out to the U.S. debt clock to get an update on this, because that's where the data was pulled from. This is usdebtclock.org. And if we go down here, for some reason, my crayons don't work. Usually, yeah, for some reason on the right side of the screen. But if you look over here, I'll get it on the very bottom right corner, right down here, paper to silver ratio. So it's no longer 400 to 1, but it's still darn near 400 to 1. We can round up 377 to 1. Man, I forgot we got other big news. Fort Knox. This is crazy. The gold in Fort Knox, and I'll say speculation, I'll say rumors. A lot of people will say there's much more evidence to corroborate this, but I like to err on the side of caution. There's some serious allegations, I guess you would say, evidence coming up that maybe we need to be a little bit concerned as United States citizens as to whether or not the gold that's supposedly in Fort Knox, is it actually there? Okay. Why am I saying this? Because there's new Russian claims, okay, that they jailed the head of the IMF for discovering that the gold was not in Fort Knox. Okay. Again, these are reports, and I believe this is coming from Russia. Okay. And now with the release of these Epstein files, apparently there's even more corroborative evidence in the Epstein files that that is indeed the case. Now, it's also interesting to think about. We know these big news stories about what a hard time Germany's, I don't know, it was like 10 years ago. Germany's been trying to get their gold back from the United States for like ever. And the United States has been dragging their feet. You know that experience you have? I've had it too. When somebody's kind of like putting you off, they owe you money or something, and they're like, come up with, anyway, think about that. And then on top of that, somebody else pointed out that President Trump had kind of made a promise that he would show some proof that the gold was actually in Fort Knox, and we've yet to see that happen as well. So again, it's a big story that's getting a lot of attention again. I'm not going to sit here and say and tell you that I think, oh, the gold's not. I hope the gold's in Fort Knox. What is it, 7,000 metric tons or something, 8,000 metric tons. But people are starting to really question out loud. And then now this new stuff came out from the Epstein files, apparently, whether or not the gold is actually there. Oh, I forgot. So when we're dealing with all this craziness in the silver market, this is what we look like. Here's a great one. Hold on. Here we are. Let me pull this up. Monetary Mayhem pointed this out. When you're still up 344% on the silver position that you bought a long time ago, and you can't be shaken out. Is this what, hold on, sorry. Now I got it up. There you are. Monetary Mayhem should be on your screen now. This is what we are, guys. This is us in this crazy silver market, right? Because we know in the gold market what we own. Right? There can be storms, there can be monsoons all around us, and we are just fine. All right, guys. Hey, thank you for joining me down here in the base. I got a super chat. Oh, ring the silver bell. All right, let's get the 400 thumbs up, huh? What do you say, basement dwellers? Let's do it. And I'll ring the good luck silver bell. I want to run out here and say thank you, Upstairs Susie. Thank you to Upstairs Susie for helping. And looks like I got a super chat from the Aussie Bay Fashion. The Chinese word for yen means money. Oh, the Chinese word silver means money. Very interesting point. We talk about that. Thank you for the super chat. Super appreciated. That's not just the case in China, and I appreciate you pointing that out. But the same word that they use for silver in many foreign languages all around the world, the same word they use for silver is the same word they use for money, which just shows us two things. Number one, silver has been money longer than anything. Oh, I got this written down. Okay. The safe haven for all times, and that it's also everywhere. Think about that. Silver's been money for thousands of years, and it's been money everywhere. Let's check in with Upstairs Susie to see if we got to 400. Did the basement dwellers get us to 400 thumbs up, Susie?
You're actually
483. 483. Hey, guys, if we get to 500, I'll ring the golden gong for us one more time. That's a supposedly, I don't know, silver plated bell. Good luck for the silver market. Now, Upstairs Susie's going to let me know when we get to 500. Hold on one second here. We got, all right, guys, let's ring the golden gong. The golden gong. No, that's not real gold. Okay. But, it's got China. 1, 2, 3, 4, 5. Listen to it resonate. All right. I love it. Hey, super appreciate you being here. Please subscribe to the channel. Come back to the basement. Be good to yourself. And I will see you. Yes, you. Yeah, you're important. Okay. Again, appreciate you coming here. We'll see you next time. Bye-bye.